We saw, I wouldn't say institutional, I'd say, technically they were whale selling, holders of over 1,000 Bitcoins. So that's either very, very large holders that are personal and private, or institutional. But like their holdings dropped, and they were dropping slightly before the crash. And so, yeah, that dropped. And unlike, normally what we see is what we have seen in past months is whenever the institutions or whales dropped their holdings, the next tier below, which is like 100 to 1,000 Bitcoins in holdings, they would gain almost a mirror image, and they were soaking up those coins. And in this case, the next tier below, the what we call the dolphins and sharks, they were pretty steady. And so all of those coins that were being unloaded by the whales just were had to be absorbed by the smaller buyers, which they couldn't maintain the price at that point. The interesting thing was that as this whole thing started to cave and the price dropped, and crypto Twitter, the world was going, oh, Bitcoin's going into a bear market. We don't see 50% drops like this without like a bear market. That was completely different. That view was completely different on chain. We saw a whole lot of new entrants come in for the very first time to buy their Bitcoins, and holders of one Bitcoin or less. So, $50,000, $30,000 investment. Those numbers started skyrocketing. And so smaller players came in to buy that dip. And so the actual user count on the network increased as this thing was selling down. And it's just that the buying power by a sea of smaller retail was not sufficient to counteract the sell-off coming from whales.